Hello and welcome to today's video where I'll be showing you key differences between term insurance and universal life insurance so that you can make a well-informed decision about which of them you should be going for. By the way, my name is OJ and in this channel I bring you mouth-watering, wealth building and protection videos as well as interviews and stories that can help you achieve financial freedom. Without much ado, let's go straight into the video. Like I told you, at the end of this video, you will be well equipped with every single thing that you need to know about term insurance and universal life insurance. Let's break it down into different sections as we make a comparison between the two of them. First of all, let's talk about the coverage. For term insurance, the coverage is usually terminal. What does that mean? It simply means that for every term insurance, there will be a particular time interval within which that term insurance will expire. For example, you could have a 10 years term insurance, a 20 years term insurance, or a 30 years term insurance. It simply means that within any of these periods that you choose, your term insurance will expire at the end of that term. And when it does happen, it means you no more had any term insurance. So if you were to die after the expiration of the term insurance, no single money will be paid to your beneficiaries. Now, let's now compare it with universal life insurance. When it comes to the universal life insurance does not terminate at any point in time. It is a long life insurance policy, meaning that it will last for as long as you live. So if you were to live for up to 90 years or 100 years or even longer, as long as you are alive, the insurance is active until you pass away. So that's one major difference you should take note of between term insurance and universal life insurance. Something else that we should talk about now is the purpose. So why would you want to take a term insurance as against a universal life insurance? Well, talking strictly about purpose, term insurance usually is used to cater for something that has a particular period. So let's take some quick examples. If, for example, you buy a mortgage property like a house, which you know that you're going to be repaying for a period of about 20 years, it makes sense to take a term insurance policy to cover for that period. And the reason is because if anything were to happen to you during that time, let's say you pass away, then the beneficiaries, which are your family members, will receive the coverage amount or the death benefit, which will then enable them cover for the cost of that house so that the parent could not take the house away from your family members. Another example is catering for your children's education. So if you know you're going to be training your children for the next 20 years, for example, you could also take a term insurance policy that will last for 20 years so that if anything were to happen to you, the death benefit will cater for your children's education within that time. And then generally speaking, term insurance can be used to cover for income losses. So that is to say that when you pass away, the income that you usually bring that help to run your family, you would have lost it at that point in time and your family will be left stranded. So that's another way of taking care of the income loss. So if you were to pass away, your family will receive the death benefit and then they will not have to suffer. When it comes to income loss, it's exactly the same thing with universal life insurance. Generally speaking, universal life insurers are good for long-term obligations, okay, such as covering for income loss, like we already said, funding a trust fund, and taking care of final expense taxes. So these are some of the purposes for which universal life and term life insurance are used. Next, let's talk about the costs. So what is it that is different between these two when it comes to the cost of premiums? Well, when it comes to that, term insurance has much lower monthly premiums compared to UL. And the reason is very simple. It is because term insurance is pure insurance. What do I mean by that? What I simply mean is that term insurance only has the insurance component, meaning that if the insured person were to die, only the death benefit will go to the beneficiaries. Now, let's talk about UL. For UL, the premiums are usually much higher. And the simple reason is because UL and whole life insurance, which are both permanent insurance, have what you call the investment component together with the insurance component. So it's like a double barrel. What that means is that when you pay your monthly premiums for universal life insurance, a major chunk of that money goes into investment for you. And that investment will grow with time, depending on interest rates and the performance of the investments. That's how your UTEL will grow in value. So, what that means is that if you were to pass away, what your beneficiaries will receive would be the death benefit together with the investment part, which is usually called the cash value. Now, we are going to be talking about the next one, which to me is one of the biggest differences between the two of them. This is really where you need to make a decision on which of the two types of insurance policies you should be going for. But before we do that, I would like to remind you that I'll appreciate if you can like this video, share it, and subscribe so that you can receive more impactful financial education videos like this in the future. Now let's move on to the next big one, and that is cash value. I already mentioned about cash value earlier, but let me explain it in more detail now. When it comes to term insurance, you do not have any such thing as cash value attached to your insurance policy. Every month, you pay your term insurance premiums, and that is all. When you pass away, the only thing that your beneficiaries will receive is the death benefit. You do not have any cash value attached to that insurance. Now, let's now talk about universal life, and that is the big one. This is the major advantage that universal life insurance has over term insurance. So with UL, the premiums that you pay monthly, about 70 to 75% of that premium goes into an investment for you, which grows over time. And it generates what is called cash value in that policy for you. Whereas the remaining 25% or thereabout is used for the cost of the insurance. So you can see why I called it a double barrel. This cash value for UL, you can borrow against it, you can withdraw from it. It is your money. You can use it to do anything. You can use it for emergencies, for business expenses, and even to supplement retirement income when you indeed retire. So you can see that there is an advantage here for universal life compared to term insurance, and that is the cash value components. Now, let's go on and talk about something else, which is the flexibility for both types of insurance. Which of them is more flexible? When it comes to term insurance, your premiums are fixed as well as your death benefits. So what does that mean? It simply means that every month the premiums that you pay are fixed. You cannot change them. You cannot adjust them higher or lower. Neither can you adjust your death benefits. But when it comes to universal life insurance, you can adjust your premiums upwards or downwards as well as the death benefit, but within acceptable limits that are set by the insurer. For term insurance, the only way you can adjust your premiums is if your term has expired and you are trying to renew it. Then you can go for a different premium. Many of the modern universal life insurances and index universal life insurances these days, they come embedded with critical illness package. So what that means is that if you were to be diagnosed with any of the critical illnesses such as heart attack, cancer, or diabetes, you will be qualified to receive a portion of the death benefit if you were to survive the required period of time stipulated by the insurance policy. So you see, what that means is that you will receive that money while you are still alive. That's what you refer to as living benefit. So universal life is really not a two double barrel, but a three double barrel, especially for many of the modern universal life insurances today. Meaning that, number one, it acts as pure insurance for you. If you were to die, your beneficiaries will receive the death benefits. Secondly, there is an investment component that grows with time, which you can use for anything or even for your retirement later. And then thirdly, sometimes you can have the critical illness embedded in it, which means if you were to be diagnosed of any critical illness and you survive the required period of time, a certain portion of the death benefit will be paid to you while you are alive. And you survive, that money becomes free money for you to spend. So that's something I wanted you to take note of about universal life insurance. Now let's talk about the last difference that I want to mention between term and universal life, and that is the end state of the insurance policy. When it comes to term insurance, there's usually a termination date. What that means is that all the monthly premiums that you have paid, all of them will go into the thin air. You have no money to collect, nothing whatsoever. Your insurance has expired, you walk away, and the insurance company walks away. But when it comes to universal life, there's no such thing as an end date. It is up until you die. So that is the main difference between term insurance and universal life insurance when it comes to the end states. Now, something else I need to mention to you here, though, is that with term insurance, there are different categories which can allow you to convert to universal life insurance. So let's look at the different categories that we have here. So let's start with the first scenario, which is to convert your term insurance to universal life insurance. So if you went for that option of term insurance, what it means is that at any point in time during that your term, so let's say you have a 10 years term insurance, at any point in time within that term, as long as the time is within the stipulated conversion period that was stipulated by the insurance company, then you can convert to your universal life. And when you do that conversion, you will not be required to undergo medical examination, which I believe is a form of a good news. Now, let's talk about the renewal. If you went for the renewable option as well, what it simply means is at the end of the term, you can't renew your insurance. It means that you can go for another 10 years or 20 years or 30 years. And also, you will not be needing a medical examination. So those are the benefits of choosing a convertible and renewable term insurance. But the only thing that you should put in mind is the fact that when you convert to universal life, your premiums will go up. And also, when you renew your term insurance, your premiums will go up dramatically. And the simple reason is because your age would have gone far. Remember, if you did 10 years initially, it means 10 years have been added to your age. And as you all know, when it comes to insurance, the older you are, the higher the premiums. As a way of closing this video, I would like to give a few thoughts of what I think about the differences between the term and universal life. So which one should you go for? Well, as you know, I will not be giving you that advice. I've given you enough information for you to know what is best for you. But what I would like to say here is that there are two inevitable things in life: debt and taxes. With taxes, you know when to pay your taxes. But with debt, you don't know when you will die. A lot of people say, God forbid. But the truth of the matter is that every single person will die one day. It's just that we don't know when. So if you ask me, what I'll simply say is that if you have the financial capability, I would advise you can go for permanent insurance, which is universal life or whole life. And that's simply because your money is working for you. But if you are not capable financially at this point in time, not to worry. Term insurance is there. It's a very good option, and it is a lot cheaper. As a matter of fact, with term insurance, nobody has an excuse not to be protected. You don't have an excuse not to have an insurance, because with term insurance, it can actually be very low. Then put in mind that you can always convert at any point in time. As I close, let me give you one last analogy that you can use to compare between term insurance and universal life insurance. So, you know the story of a tenant who rents a house and someone who buys a house using mortgage from a bank. So, I need you to relate it to what I just told you. When it comes to the tenant, they pay monthly rent to the landlord, and that monthly rent, they will never see that money. The money belongs to the landlord. Whereas when it comes to the person who is paying their mortgage monthly, that portion of money they pay to the bank monthly, some of it goes to their account with the bank. A day will come when they will request for that money and the bank will give that money back to them. So you can see that is exactly what it is like with term insurance and universal life insurance. Thank you for watching this video. I really appreciate your time. I'll be seeing you in the next one. By the way, if you want to know how to secure your retirement successfully, I have a video there which talks about strategies of how to have a successful retirement plan. I advise you to take a look at it. That's it for me. Goodbye until I see you next time. Stay healthy and wealthy.